Welcome to Naked Real Estate, the barrier-free experience. My name is John Su. Today we're talking with Kaleem Khan, mortgage specialist with Dominion Lending Braco. And today's topic is what not to do before you move in. So I've seen cases like, especially with the downturn in the economy, it's 2016 February, people are getting laid off. And what really worries me is clients that say have bought new homes that take 7 months to build, and they're getting laid off and they're not getting their mortgages approved and putting themselves in bad positions. Or people who have had a buyer, he's saying, yeah, John, known you for a couple of years, it's time to put you to work. Let's go look at some condos. I want to buy an investment property. I'm like, yeah, cool, man, let's do that. And then, that was Friday. Come Monday, he's like, hey, John, I can't meet with you today. I'm like, oh, why not, man? He's like, just got laid off. And I was like, oh, crap, wow, lucky I didn't take him out, find a condo for him, pay for the inspection, get everything done and improved, and then remove conditions, and then he gets laid off. Then he'd be in a real bad position. So actually, I'm glad that happened for the timing, so that he didn't end up in that position. But Kaleem, can you share with us some things to absolutely not do before you move into your house?
Okay, so one thing is, you right from the get-go have a very good discussion with your mortgage broker. And so once you have your approval and you're going to get a home in 2 months from now, maybe 3, maybe 4, it doesn't matter. Like, if you're going to get a home in the near future. Okay, or so in a case like that, don't go out and get new debt. If you're going to go out and, for example, because you've got the break that offered you, do not pay, no interest, nothing in 6 months or a year, have a discussion first. Have a discussion with your mortgage broker. See, is this going to affect before I move in, because the bank may pull my credit bureau again and may look at, have I acquired new debt and will I still qualify for the mortgage? Have that discussion, because sometimes that has happened where we're seeing, clients will go out and get new debt and now they don't qualify for the same mortgage that they did 2 months ago. So consistency in that way is very important.
Banks are checking up a lot more, especially during downturns. They're becoming more tight with their mortgages. Usually in boom times, banks are becoming more, lazy because they're overworked, that they won't check as much. Would that be correct or no? Or they're always checking now?
I no comments on that, but there's always a possibility. I mean, I've been banking for quite some time, but it's just one of those things. When banks are overwhelmed and there's a lot going on because the economy's picked up and whatnot, it's not necessarily leniency. It's just don't have the time in that way. But regardless of that, as far as looking at how the mortgages work, and in any industry, whether it's a boom or a bust or whatever's going on in the economy, one thing that to note is, if you were approved for a mortgage and you're moving into your home 4, 5, 6 months from now, there's a good chance, and this is something which they'll do. They'll recheck your employment again, just to make sure you're still employed. Of course, it makes sense for yourself, because they want to make sure that you can afford the mortgage.
Within weeks of you moving in. So
absolutely.
don't think, oh yeah, it's good, it's already been a couple of months. They do last minute checking.
Absolutely. And I've seen insurers, which would be Canada Mortgage Housing Corporation or Genworth or Canada Guarantee, actually do pull out of a mortgage on the day of funding, just because they've realized now, they found out that you've gone out and gotten way more debt. So be careful with that. Or if you've lost your job, those things, we have to be careful about in that way. If you've been working for a company for 20 years, it's a good chance they probably won't let you go. But it's
number one, don't acquire new debt. What's something else that people should not do before they move into the house?
Well, mainly it's that debt. Secondly, just keep watching your credit bureau. You don't want to, again, acquire a lot of debt or get things that fall into collections, or have somebody else.
Change of employment.
Change of employment is also quite important as well, because you got to realize, if you are looking at a house for 6 months from now, but you decide that that in 4 months, or you're about to get your new home and you want to switch jobs, don't. Again, have a discussion with your mortgage broker. The reason is because most of the times what a bank wants is they want to confirm that you're not on probation on a new job, or at a job you're not on probation. That probationary period in Canada is usually about 3 months. So
you got to time it maybe.
So time it. I mean, if you're going to move into a home after that, just know what you're making. I mean, are you taking a lower salary? That could affect your approval at a later point as well. So just again, keep in touch. Always keep in touch with your mortgage broker. See what's going on. If you want to change employment, and you're getting better employment, perhaps do it later on. But again, do realize that even when you get a new employment, is that probationary period. At the end of it, nobody wants. Banks are not in the business of foreclosing on houses, right? That's not what they're in the business for. So let's just be careful for each other, right? Look after each other.
So the probationary period is kind of what people need to navigate. Is what if so you're saying if they can go to a different industry, and as long as they're not on probation, before they move in, they're pretty safe.
Yes,
Say,
we can
on a
definitely.
general level and
On a when we look at generally, absolutely, there would be. If you're taking on a new position, you're going into a new industry, fine, that's fine.
Just not on probation
You're just not on probation anymore, which is at least a 3-month period, right? And then we need proof that you're not by the employer saying, look, you're not on probation anymore.
How about probationary period but same industry?
You're still on probation, so you could still
So
be
they
let
don't
go.
care.
Yeah, so regardless of that, we just want to make sure you're not on probation. Again, in most cases, in some cases, we can work around it.
Okay.
And the banks may tag along additional, and I've seen this before, may tag on, just extra or
Bigger down
increase the rate
payment.
or add more, add to the rate just because they're lowering
Increase
the
your
risk.
rate.
Yeah, things like
Yeah.
that. So, just
The white collar cousin Vinny. Right,
There you
raping you because they know they can.
absolutely.
Yeah. Okay, nice. Is there anything else besides employment and debt loading that people should not do?
That's pretty much it.
Pretty much it, eh?
Yeah, absolutely.
Okay, fantastic. Thanks, Glenn.
Thanks so much.